Hey, we're talking markets today with Tommy Grisafi with Advanced Trading, ATI, ProMedia. Man, Tommy, there is a lot of things happening in the news, but a big story, obviously, this week is the Fed back out with their latest news on interest rates, and we went with another 25 basis point bump in those interest rates. I think the market expected it, but it really does tell us what's going on with the marketplace financially.
It's interesting because these are allegedly the highest rates in 22 years. So, say you're a 40-year-old farmer. You never dealt with this. You would have been 18, right? So, say
Right.
you're 45. Well, interest rates were this high, but times were different. And what was different about what we dealt with 20, 25 years ago? Or even if someone says, well, you didn't live through the 80s, it was pure hell. And I believe it was for many. But operating notes in the 80s were about $100,000 or $200,000. And most of my clients, Don, and almost everyone you know up there in the Red River Valley, there's another zero attached to that number. So we now deal in millions. Remember these numbers: 8, 9, 10, 11%. And I don't think you'll see much operating going out at 8. I talked to my good friends at First State Bank over there in Grand Forks, Mayville, and everywhere else, and I said, "What do you think operating realistically is going to look like here in the winter months?" And they said 9, 10, and 11 will be standard procedure for operating, depending on your credit and risk profile, and that's a big number, and that's where marketing grain, merchandising grain, holding inventory. When I look right in the camera and smile and say, I promise you, store and ignore is not going to work as well as it used to, for two reasons. One, the world's going to start to produce enough grain and prices look to be calming down in the future. And two, the cost of storing millions of dollars in grain versus turning that grain into cash have changed. And I think we're starting to see it affect a lot of decisions in agriculture, Don.
So tell me about that. Obviously, we've always been trained to carry that grain and do it. Wait till we get the best market, but now you've got to take a look at what the interest rates, so what it costs to carry that grain. I guess I'm saying.
Yeah, so during the housing debacle of 07, 08, 09, our federal government did QE 1, 2, 3. They had all types of funny names for them. Pretty much it was them keeping interest rates artificially low. Then we started to have a little bit of an interest rate in that 17, 18, 19 period. But then this little virus came over from China. And not only did we do like a massive QE, but we pretty much took interest rates to zero. And in some cases around the world, at one point, there was close to $20 trillion of negative rates. Well, we've come out of that. That bubble's come out, and that lost 15 years of very low rates, we're not in that anymore. So no matter who you are, how wealthy you are, if you say, well, young man, I got news for you. I don't need the money. Well, you may not, sir, but every bank in your little town, in every community, will gladly give you 5%. So the math of it, to answer your question, is would you like to make 5%, or would you like to gamble, which is depends which way your gambling's going. But if you store a bushel and that price decreases, if you store $1 million worth of grain and it turns into 900,000 versus selling that $1 million worth of grain and making 5%. So every $1 million of cash right now you have has the opportunity to make $50,000 in earned income off of interest payments alone. And you're either making interest or paying interest. And that's what's happening right now in the world. And I think my personal opinion is farmers, ranchers have a big decision to make right now. Are they going to store grain through OND, October, November, December, or are they going to turn that grain into cash? Now, come the old JFM, Jan, Feb, March, that's when they renew operating, and that pressure and sitting down with the banker. I'm not saying things are bad in agricultural land. They're not. There's plenty of capital. But with lots of capital, give someone the opportunity to make a poor decision, Don.
So is inflation here for? I mean, is this a short-term situation, or are we talking 1, 2, 3 years down the pipe?
The Fed said that the number 2025, that they didn't maybe see us getting below a certain level till 2025. They see elevated Fed funds rate, that they're becoming more open. So the Wall Street people who said, sure, they're going to raise rates a few times and they're going to collapse them, they're going to have to. Well, there's something really interesting happening. You can currently, as an investor or someone with money, get 5% on your money. The stock market is touching or real close to all-time highs every day in the Dow Jones, S&P 500, and NASDAQ. Land prices are still stable, and commodity prices are starting to inch their way back up. You're seeing elevated crude, elevated soybeans, elevated cotton. You're starting to see commodity prices up. We had a limit up move in wheat. You're seeing little bits of commodity inflation coming out of the woodwork. And so the very purpose of, hey, let's raise rates and stomp on this inflation, who it's stomping on are people in the commercial real estate business, young people wanting to buy a home, older people maybe wanting to downsize a home and refinance. The actual borrowing of money, it's starting to, I don't want to say freeze up. That's a scary term. It's starting to slow down certain sectors. But when it comes to the stock market, it's on fire. And it looks like higher interest rates in dealing with these mathematics. And I'll gladly sit down with anyone and work out the math on should we store or should we sell? How's this look? As you know, if you put 100,000 bushels of corner beans in a bin, you don't exactly get 100,000 bushels back out. There is a huge cost of labor to put that grain in the bin. There's a cost of labor to take it out. And there's this little thing called shrink. And there's all types of magical words when it comes to dealing with the physical grain. And that's something young people, middle aged, even someone older like us, Don, we need to push that pencil. I happen to have a pencil right here. Need to push that pencil and figure out that mathematics.
Looking at other stories that are facing us today, that Black Sea region remains very unstable. Obviously, Russia pulled out of that Black Sea grain initiative, and Russia now basically coming out and saying that anything moving on the Black Sea, they're at risk. NATO is stepping up, trying to protect any shipments that would be on the Black Sea. European Union getting involved, looking at solidarity lanes, I think was the term they used, to try and find other ways to move grain out of the Ukraine. Simply put, though, it's going to really impact global food supplies and likely food prices around the world.
Yeah, it's a horrible situation, especially for struggling countries, struggling people. The overall cost of dealing with a bushel and moving a bushel in the world is going to go up, not down. We have some of the most fertile ground in the world. I want to say the number 14% of some of the richest soils in the world are in that Ukraine region, the Ukraine-Russia region right there on that border. And that produced a lot of good grain in the past. How are we going to get that grain out? I don't know. I don't know. They're going to have to work on it, but I know this: it's going to be a lot more expensive than it would have been to load it on a boat and have it safely leave that country. So what's happening, Don, is other people in other countries are starting to have to make other plans. And that, I hate to say this, it's going to slowly make that region less important and people less dependent on that region for them to source grain. And in the end, in a few years, however this ends, that Ukraine area becomes Russia or it goes back to Ukraine and stays Ukraine, the world's ramping up grain production, and it when all systems are go in a few years, when we're all producing a lot of grain, it could make for a very, very ugly bear market.
Tommy, we've been in the cooker this week with temperatures in a lot of areas well into the upper 90s and triple digits. What's that mean for us as far as the crop itself?
Well, as you know, it's summer and we do get hot. These are extremely hot temperatures. Tonight I'll be attending the Porter County Fair. Shout out to all the kids there in the 4-H, and they're going to have the hog and cattle auction. It's going to be hot out there. They're worried about attendance. They need people to show up, donate money, buy, purchase an animal, and it's affecting crops. I'm super excited about the Pro Farmer Crop Tour. I hope you and I, maybe we could do one of these videos with Chip Flory right before he goes on that. I think it's going to be a big deal. How much top end have we taken off in Iowa, Indiana, Illinois? I think their one shock on this heat is watch out for the fringe acres. That's anything that's not in the middle of the country. I think fringe acre bushels are going to be phenomenal. Kentucky, Tennessee, states like Pennsylvania, New York, parts of Nebraska, Kansas, South Dakota, North Dakota. You guys were looking really good. You guys need a rain up there. So how does North Dakota and South Dakota finish up? Some of my clients had potential for one of the best crops ever, but you're going to need more rain. Yes, we're focused on the heat because it's hot today, but moving forward, we're going to go from 90s to just 80s and maybe even some 70s. With that, Don, I pray that we get some moisture to the people who need it. And I'd rather deal with the bushel than a lack of a bushel and a higher price. So I'm hoping for big bushels, okay prices, versus, oh, the bushels aren't here, the market runs up. We need the bushels.
No doubt about it. In fact, for our wheat growers, they've been bringing out this crop. One of my broadcasters was on the road last night and actually saw some wheat being harvested in southern North Dakota. So that crop, that harvest is moving northward.
Yeah, so we'll know a lot more here in the next 5 to 10 days. What's done's done, and of course that's the hard red wheat that we trade up there at the Minneapolis grain exchange, the spring wheat, as we like to say. And that's had its own volatility. Spring wheat's had a little bit of a bid. I think just before we started broadcast, spring wheat was up 7 and border trade wheat was down 3. So you're seeing a little spread action in that border trade versus KC versus Minneapolis. Of course, nobody in the outside world is tripping over themselves to come to America and buy wheat. Of course, every wheat farmer thinks when they read the headlines, they're going to need our wheat. There's still plenty of wheat in the world. We're just trying to figure out how to get it to where it needs to go.
No doubt. Tommy, if folks have questions, as always, how can they get in touch with you?
Yeah, give us a call, 1-800-664-4383. Don, on this video, I left the comments open. People are more than welcome to ask us a question. We could address it in future episodes. Of course, if people want to get a hold of you, we'll do a little cross-promoting here. How do people get a hold of Mr. Don Wick from the Red River Farm Network?
You can check us out online, rrfn.com, and we have all of our news up there, as well as a place where you can sign up for a weekly e-newsletter as well. So check that out.
Don, I have to tell you, of all the things I do at work, this is one thing I look forward to. Of course, I look forward to all the things I do, but this one's one of my favorites, and I hope we continue to do more of them. Thank you, sir.
Thank you, Tommy. Tommy Grisafi with us from Advanced Trading ATI ProMedia.